Welcome back to the Neuro Finance Masterclass. Last time, we talked about just surviving the brutal volatility of the crypto markets. But you know what? Survival isn't enough. A true financial architect, someone like you, needs a place to anchor their wealth when that storm inevitably hits. So let's dive into exactly what that anchor is. Just picture this for a second. The market is in an absolute freefall. Everything's red, and every second is critical. Now, your first gut instinct might be to cash out, right? Get your money to your bank account fast. But that's slow, it's clumsy, and most importantly, it pulls you completely out of the digital ecosystem. What if there was a way to find a safe harbor inside the crypto world itself? And this is a really fundamental shift in thinking. The goal isn't to run for the exit every time things get choppy. The goal is to find a digital anchor, a safe harbor where you can secure your capital, take a breath, and wait for the storm to pass. And believe me, there's a specific tool designed for exactly this purpose. And that tool is the stablecoin. You've probably heard of them, names like USDT or USDC. The concept is actually pretty straightforward. Unlike something like Bitcoin, whose value is all over the place based on market forces, a stablecoin is engineered to maintain a steady price. So, for example, 1 USDC is always supposed to be worth $1. Think of it like traditional cash, just living on the blockchain. So here's the key distinction, laid out plain and simple. On one side, you've got your volatile assets, Bitcoin, Ethereum, with that huge potential for massive gains, but also gut-wrenching downturns. And on the other side, you've got stablecoins. Their entire purpose isn't to make you rich overnight. It's to provide a predictable, stable store of value right there on the blockchain. So how can an architect like you use this strategically? Well, this brings us to a strategy we call the tactical parking lot. And this is the dynamic way to manage your portfolio like an absolute pro. Let's break down exactly how it works. Okay, here's the playbook. Step 1, the bull market is raging and your portfolio is looking great. Step 2, you take some of those profits off the table and convert them into a stable coin. You've just locked in your gains. Step 3, you just wait. You hold those stable coins right through the bear market while everyone else is panicking. And then step 4, you use that parked capital to buy back into your favorite assets, but now at a massive discount. See what happened? You just navigated the entire market cycle without ever having to leave the crypto ecosystem. But, and this is a big but, a true architect is never complacent. While stablecoins are incredibly powerful tools, they are not risk-free. It is absolutely crucial to understand the illusion of perfect safety that can surround them. I need you to really let this sink in. Not all stablecoins are created equal. Assuming they're all equally safe is a critical and potentially costly error. Due diligence isn't optional here, it is mandatory. You have to understand the specific risks of whichever stablecoin you choose to use as your anchor. So, what are these risks we're talking about? Well, first, a lot of stablecoins are issued by central companies. If that company doesn't actually hold $1 real in a bank account for every digital coin it issues, the whole system can fall apart. This can cause the peg to break, meaning your $1 coin is suddenly worth, say, 90 cents, or even less. And in the most extreme cases, like we saw with the algorithmic stablecoin Terra/UST, a flawed design can lead to a complete and total collapse, wiping out billions of dollars practically overnight. So, with an understanding of both the incredible strategy and the very real risks, how do we apply this? What's the takeaway? Well, it all comes down to adopting the architect's mindset. It's about moving from being a reactive gambler to a proactive strategist. This quote right here, this is the core difference. The amateur rides the market all the way up and then all the way back down again, losing it all. The professional, the architect, has a plan. They know when to take profits, when to park them in a stable asset, and how to preserve their capital for the next big opportunity. So here is your task for today. Don't just listen to this. I want you to internalize it. Your goal is to master the process of moving between volatile assets and stable ones. Go to your exchange, find the trading pairs like BTC to USDT or ETH to USDC, and just understand the mechanics of how it works. Practice it. Make that conversion second nature. And this is the question I really want to leave you with today. Your answer to this is going to define your financial future in this space. Are you going to be swept away by the emotional tides of the market, or are you going to build a structure, a plan, a fortress for your wealth? The choice, as always, is yours.